But in 2003, when the same Bob Shiller and Mr. Case, the two famous names behind the Case and Shiller index, were making surveys around what was around whether individuals in the market households believed that the housing sector was a safe investment. A large percentage, the majority, over 80% of the responses was that yes, it's a safe and an investment that brings strong returns that we trust, that we are confident in, and so on and so forth. Well, actually, if you look at the time series, prices have barely kept up with inflation. So it wasn't that high return investment that everybody thought. But and from the beginning of the millennium, you see a disconnect between income and house prices, where income was correlated one-to-one with home prices until the beginning of the millennium, and then home prices started spiking up while income continued to be flat. That was a first signal to me and to us that there was some fraud, something wrong, something that was getting out of hands, and that we were developing a dangerous bubble on the real estate market. But the most important part was that it wasn't only the real estate market, which is only 5% of GDP, but it was something more. The real estate market was just the collateral of something perhaps more harmful. That was this huge bubble in credit markets and derivatives. So now let's fast forward. I don't want to go into the details of really how this developed and how we got here, but let's fast forward to today. Today we are in a situation in which the economy is in a sharp recession, and probably only halfway towards a sharp recession that will continue well in 2010. We are in a situation in which credit markets are frozen, and confidence and trust among businesses. Businesses are not lending because they're hoarding cash. They are afraid of the uncertainty in the future. Banks are not lending. Consumers are credit constrained, but there is also a lack of demand in credit. Let's look again at the housing market. Affordability is an all-time high, but demand in the housing market is not coming back. And actually, the fact that we could read some positive news on the supply side, where housing starts are starting to tick up a little bit, it's actually very dangerous, because we are on the risk of going back, of reinflating those inventories that are still at an all-time high. If demand doesn't pick up and housing starts on the supply side start increasing before then the risk is really that price correction in the housing market will continue.